Rads. A prepaid expense is simply an expense paid for in advance. Thus, when a business pays for expenses in advance, we're creating a current asset because what we have is an economic resource in terms of what this payment represents that will provide a future economic benefit for a period that will be somewhere between a few weeks and up to a year. Now, when we get to balance day, which will be the end of a month, quarter, half year, or year, we will have a full or partial consumption of this asset. And so, therefore, this is where the accrual basis assumption kicks in, and also the period assumption, which requires us to recognise the expense that has arisen in terms of that consumption of that prepaid expense. Let's illustrate how to record this with a practical example. Looking up the top of your screen here, we've paid an annual insurance premium of $8,000 plus 10% GST, and importantly, the premium kicks in 1st of April 26 and will run through to the 30th of March the following year. So if we look down here in terms of the bottom part of the shaded bit, we're going to record the initial payment in the general journal and general ledger, and then we're going to do the consequential balance day adjustment at the end of our reporting period, which is 30th of June 2026. So let's move to our GJ. So our date of the payment was the 21st of March. I won't worry about the year there. And we've created a current asset, prepaid expense. And again, it's an economic resource that will generate a future economic benefit starting on the 1st of April. So this is classified as an asset, and when we increase an asset, we do a debit entry in our general journal and our ledger. Prepaid insurance, $8,000. In terms of the GST, which will be 10% of that 8,000, that is a debit entry because that will offset the GST we collect, so it'll reduce our liability to the tax office, and then the combined amount of those two amounts, given it is an EFT, an electronic funds transfer, will trigger a 8,800 reduction in our bank account. So let's go and post that to the GL. So in our prepaid expense ledger, we're going to cross-reference that with bank, the source of the payment, 8,000, debit. We don't touch the insurance expense yet until there's been a consumption. So I stuffed up my, oh no I didn't, okay. So 21st of March, we did a credit entry to the bank for prepaid insurance / GST, which won't fit, of 8,800, and our GST, we did a debit entry for 800 cash at bank on the 21st of March. All right, so now we get to balance day, and we have nothing in our insurance expense account. So again, the accrual basis assumption kicks in here. We need to recognise the partial consumption of the asset, and therefore we need to do a little bit of maths on here. So again, the actual period that the insurance premium runs for is 1st of April through to the following March. That's a full year. And so therefore we've used up by balance day, 30th of June, we've used up all of April, all of May, all of June. 3 months out of 12, that's a quarter of the year. So 1/4 of the prepaid expense needs to be recognised in terms of the consumption. So therefore, we are going to debit our insurance expense, and we're going to credit our asset given there's been a partial consumption of that. So let's enter that in our GJ on the 30th of June. Again, we debit the expense, which is increasing by 2,000, 1/4 of 8,000, and we're going to credit our asset because 1/4 of it has been consumed. That's how we manage our GJO. So let's update and complete our ledger. Again, the part 3 in terms of the requirement is asking for us to complete the 2 top ledgers here. So again, my date, 30th of June. My cross-reference is insurance expense, which I didn't spell, or 2K. And then to complete the ledger, we're going to formally balance it on the same day. So that means we need to top it up by 6,000 so that we get matching amounts on both sides. So again, I've just deducted that 2,000 from the 6,000, and then we're going to formally balance it in preparation for the following period, which will be 1st of July. So we end up with a debit balance of 6,000, which represents the 9 months that we will have the benefit from the 1st of July to the end of March the following year. Now, in terms of our insurance account, again, we need to recognise the consumption as we did in the GJ. So therefore, we did a debit entry to our expense account. So this will be reported in our income statement. And we cross-reference that with prepaid expenses, prepaid insurance, I should say, by 2K. And because we need to complete it, we need to close this off to the profit and loss summary account so that it's zeroed off and ready for the following period, and also to help us calculate our net profit for the period. All right, so therefore we close that off to our temporary P&L summary account.